Well, thank you, Jeff, and good afternoon, everyone. It's a pleasure being here, and certainly the topic is one that I have a lot of passion about. I've had passion about it throughout my career, and hopefully I'll be able to challenge you today. I know we have a very diverse audience, and this is really going to be about you. I realize that you're all unique, and I'll learn a little bit more about you in just a few moments. But a little bit about my background is I was a partner in a regional firm for 20 years and started Boomer Consulting, and we really focus on 4 areas of the practice. That's leadership, talent, growth, and technology. And I've always believed that technology was the accelerator, and that you didn't necessarily need to know how to build the watch, but you needed to know how to tell time. And with that, I built a diverse group of individuals that have a lot of different skill sets in the 4 areas. We have several programs, but the purpose of today's program is not to talk about our programs, but talk more about what's going on in your world and what I see as I travel throughout the country. Now, one of the things that I've seen in the last 2 years is a whole lot of interest in partner compensation and also in process improvement. And this past year, we added floativity to our capabilities. Dustin Hostetler now is a shareholder with Boomer Consulting, and we think processes is very important, or processes are very important, I should say. And I'll tell you how that kind of will apply to your advisory services practice. We've written several guides and books. As Jeff said, we've been recognized. We've been fortunate enough to have contact with some of the best industry leaders out there. I want to find out just a little bit about you before we get started here. So we have a polling question about the size of your firm, and if you'll respond to that, that also helps us meet the requirements for CPE. So 4 distinct groups there: the large firms over 50 people, and then the smaller firms under 10 people. Who's in our audience today?
So if you would, please go ahead and respond to the poll. A little reminder, you must answer the polls, participate all the way through to get your CPE, which we will issue promptly after the webinar and in the next 48 hours. So John has got the poll open, and please go ahead and answer in one of those categories. How large is your firm? Less than 10, 11 to 25, 26 to 50, over 50. We'll leave it open, John, for just a few more seconds, and then if you can show the results here in about another 30 seconds, that'll be great. Okay. So, Gary, what we're seeing from the results, and I thank everyone again for participating, less than 10 is 77%, 11 to 25, 10%, 26 to 53%, and then over 50, 10%. So certainly skewed to the less than 10, but then equal between 11 and 25 and over 50.
Well, thank you. That helps a lot, and I need to tell our audience that, I hear comments all the time that everyone thinks they're different. If I'm in a 200-person firm, they certainly think they're different than a 2-person firm. And in some ways they are, but in other ways there's a lot of similarity in the profession. So my big challenge for you today is I want to help you think differently, because how you think about the problem is pretty important. And the reason I think you need to be thinking today while things are good is our profession's changing very rapidly. Most of you are aware of that. Most of you know that you need to make some changes, but it's tough to make changes many times when your income is at an all-time level, things are really going well in your firm, and we don't want to screw that up, is the typical CPA thought process. So I'm going to try to help you think a little bit differently and tell you that some of this at the start will be a little bit challenging and maybe push you out of your comfort zone. But by the time we get to the end, hopefully you will have a level of confidence that's pretty high, and you will be able to move forward with some valuable action steps out of today's webinar. So I'm just going to show you a slide that came out of the Economist. I read the Economist frequently, and this was taken in 2013, showed up in 2014, but everyone's being disrupted today. And we think of technology as a disruptor, but there are global disruptors, there are other type of disruptors, and a lot of people will say if you're not being disrupted by somebody in your marketplace, disrupt yourself and think about where you want to be 3 to 5 years from today, and are the services you're offering going to be relevant, and will you be relevant or ready for the future is a question. Well, accountants and auditors, according to this survey, were one of the highest disrupted profession, and because of technology, a lot's going to change. It already is changing, and more will change in the future, as you will see in the presentation here today. Well, our vision as a company, and it took us a while to come to this. When I started off, I thought it was bridging the gap between management of a firm and the technology, and today it's really focused on making you more successful and future ready. I know everyone wants to talk about the firm of the future, or they want to say, are you ready for the future? Are you going to be relevant? So this is how we worded, and it took us a lot of time to come up with this as a visioning session as a company, but this is our vision for the future. So I want to elevate your thinking a little bit. You're all great thinkers. You think about your clients all the time, and you try to solve the client's problems, but I don't think you spend enough time thinking about your own business. You work in the business and not on the business. So how you think in the future is pretty important. You'll see up at the right-hand side is a very important concept here. It's called 10X thinking. I've been involved with Strategic Coach now for almost 20 years. It's a program by Dan Sullivan. It's been an excellent program for me. I started when I was a partner in a 50-person CPA firm, and it's changed the way I think about various problems. I've been on both sides of the desk as a partner in a CPA firm, as a consultant, and as a purchaser of services from CPA firms. So how you think is very important, and the tendency in our profession is to be very conservative and think incrementally. What if our business would grow 5% this next year, or grow 5% for the next 10 years? How large would we be, and what would we have to do? Well, it's a lot more exciting, and it changes your thinking if you say, what if we were 10 times as large tomorrow? So if you're one of those 10 or under firms and you're at $1 million to 1.5 million, what if you were 15 million next year? Now, don't worry how you're going to get there. Don't worry how you're going to staff it right now. But what would you do differently, both as a leader in your firm and as developing services for your clients? If you're a $15 million firm, what would you do at $150 million? Or if you're a $150 million firm, what would you do at 10 times? I think these are all relevant questions that you should be asking yourself and your firm today. So the challenge we have here is about complacency and change more than it is the technology, the management, and the leadership, although there is no one silver bullet that guarantees success. And I'll talk about success a little bit later. Whether you think you can or you think you can't, I've heard this for years. Henry Ford said it. He said, you're right. So it's an attitude that you have to have. And one of the reasons for all my passion in this area of client advisory services is I believe we missed out on an opportunity 20 years ago, and that if we miss this opportunity, the profession's relevance and growth is going to be diminished rather than expanded exponentially. So I think we really have an opportunity here. So today I'm going to talk a little bit about the metrics that everyone always asks me, well, what are other firms doing? And I'll try to give you some of those quickly. Then how do the people that are the most successful, how are they operating, and how are they different from the rest of the firms out there? Then what are a few of the trends going on? And finally, I'm going to touch on the importance of processes and how I feel that many firms are very inefficient in that they have way too many loops in their processes. Their processes last way too long in the cycle time, and they could be far more profitable than they are today if they would simply use Six Sigma and make those processes more efficient. So let's start with the metrics, and I should tell you a little bit more about Boomer Consulting. In 1999, we were asked by several of our clients to start what were called the Boomer Technology Circles, and this is a community of firms ranging in size from just under 5 million to over 500 million. So we've got a good cross-section of the entire market, and these metrics are from those member firms. They may have different firms in them each year. If somebody merges, they might not be in the metrics in one year, but would be in subsequent years or vice versa. So I'm going to show you some trends here. These are preliminary results for 2014, our last year of collection, and we're wrapping that up right now. But you'll see over the past 5 years, we've gone up about 30,000 in revenue per full-time equivalent. And average, I have to tell everyone, is where the best, the worst meets the worst of the best. So it's something that no one wants to say they're average, but half of the firms out there, not necessarily on the call today, but half of the firms out there are below average. So there's always room for improvement. It's much like your golf handicap. If you know what this number is, strive to improve it, and it will drive more profit to the bottom line. You also see the average hourly rate there has gone up over 5 years from 146 to 171. And I should define a full-time equivalent. It's at the bottom there in a footnote. That's 2,080 hours. So if someone works 2,400 hours, some of you partners out there, you're 1.3 full-time equivalents. So you have an impact, and there's always the argument is, what is a full-time equivalent? We have used 2,080 so we can compare firms. We can take into account those firms that have seasonal workers, and we take this based upon total hours, not just charge hours. And we started this 15 years ago. So these numbers have a pattern to them, and we can track this. Contrary to what most people believe, in the majority of firms out there, there's less than 50% of the time being charged to the clients. And the technology investment has run between 5 and 7% over the last 10 years. We've actually seen a little bit of decrease in the technology spend the last 2 years. I believe that's due to some of the major changes that are going on. People aren't quite sure of where they need to head. But if you look at the investment per charge hour, that's about $9 to $10 per charge hour. And their support ratio is 1 to 32, which hasn't changed over the last 5 years. That number is a little bit hard to calculate with more outsourcing going on than having people internally in the firm. One thing you'll notice on the next slide is that the average hourly rate was carried across to this slide, and I didn't notice this till I looked at them just before the start. So 171 is just an estimate, but if you used a multiplier on your technology cost, the same as you did your labor, that means your labor revenue per hour is about $138.45. And this was the old technology surcharge theory that I came up with over 20 years ago. A lot of firms used it, but you should get a return on that technology just like you do your labor. And I don't want to spend too much time on this because this is really focusing on hours times rates, but people still look at that. I believe going into the future, you've got to bill for value and not hours or effort. So these are just some metrics that we've collected over the years, and I wanted to share some of those with you. And if you have any questions on these, don't hesitate to submit a question. Jeff will accumulate those, and then I plan to have some time at the end that we can go over those questions. So all progress really starts with the truth. This is a Dan Sullivan quote, and Dan says that you can't really improve if you project you're something that you're not. So I say that in many accounting firms, especially the smaller ones, you're so focused on the client service and taking care of clients that you don't focus enough and value the management of your own firm. And therefore your profits suffer, your growth probably suffers, and it's just challenging with that management to grow. So here are some questions I would ask that you present to yourself or to your firm. I'm not going to go through all of these. I'm going to pick out a few that I think are very important to advisory services. I'm often asked, what advisory services should we offer? And I'll get into that. And then I ask the question, why aren't you doing that today? And the number one answer, without a doubt, I receive is, we don't have time. And I say, well, why don't you have time? And they say, we're too busy doing the compliance work of tax returns and financial statement prep, but yet the firms aren't making what they want to make. So one of the questions I challenge you with is, how many clients pay you less than $1,000 per year? Because I think you're going to find that you've got an awful lot of touches of those small clients. If you want to drop that number to 500 as a smaller firm, that's fine too. But you can only grow so large with really small clients. And the more important part is, if you don't have time to service those larger clients and provide more advisory services to them, where's that time going to come from? And the only way that I can answer that question is, you either got to stop doing something from the past and do something different for the future, or you've got to get more people and have more capacity. Another thing that I would say in the process area, since Dustin Hostetler has joined our firm, I've been fortunate enough to go on several consulting engagements with him, and it's been pointed out to me several times in all sizes of firms that most of the tax returns are getting over-prepared and over-reviewed. Now, anytime I make a general statement like that, somebody's going to certainly be capable of challenging it, and I realize that. But I think many of our systems and processes in reviewing were set up in previous generations of technology and previous processes and had a lot of loops in them. And if you can cut those loops out, cut the cycle time, the client's more happier and you're more profitable. So those would be all things that I would ask. Sorry about that. I hit my mouse and it jumped about 5 slides. The next thing would be accountability. Do you have some way to hold yourself and others accountable in your firm? Because accountability is the quickest way to change the results if you want the results to be changed. Another question would be, are you undercapitalized so you can make, or you can't make the investments you need? Most firms draw out all the cash out of the firm and then tend to be a little bit undercapitalized. These are just trends that I see around the country. So I picked out enough questions to at least get you thinking. This could be a good partner meeting conversation, or a good thought leader conversation within your firm if you don't have partners. So here's some of the traps that I see in our profession today. Is everyone looks around and sees what their peer firm's doing and they follow the herd. With what's happening in the way of services today, I don't think you want to follow the herd. I think you want to listen to your clients, and you may need to talk to some really leading people out there as to what the services should be in the future. The other thing that I often smile about is that CPA firms think they're different than any other small business. But if you look at the top 100 CPA firms, they break at about 35 million. So there are only 100 firms that are above 35 million. That tells me of the 45,000 CPA firms that are members of the AICPA, and there's certainly more accounting practices out there, probably double that or more. They're all small businesses. So the problems you have are the problems that your clients are also experiencing. And if you think you're way ahead of your peers, you may not be right. So it behooves you to get out and find out what's going on. I think we also have a tendency in our profession to focus on maintaining and reliability of systems and not enough about innovation and best practices. So I always say the other thing that is a trap is if you don't know what you don't know, it's probably costing you money. So you better find out and be aware of what's available out there in the market today. So here's the real puzzle for the future. And I don't want to say this puzzle is easy to put together, even though this looks pretty simple. But what's your menu of services in a year or 2 years or 3 years? What's that need to be? And I often find that firms don't even have a menu of service. They may have different services in the A&A area, in the tax area, or in the consulting arena, but no one's put a menu of services together much like you would see in a spa if you were going in, so that the client can pick multiple services from each group. And think of it much like a restaurant. You have starters, you have the main entree, you have dessert in a typical restaurant. More gourmet restaurants may have more courses to the meal. But one of the things we've done for our clients is help them put together a sample menu. The tendency is everyone wants every services to be on that menu, but you don't have to have everything on the menu. Who's going to deliver the service is a key. It used to be, I'm a rugged individualist, I can do it all. The client's services are way too diverse for one team member to deliver everything and do everything, and that's how you get leverage. That's why Boomer Consulting has approximately 14 people today, because I didn't want to be a rugged individualist. I wanted expertise in the areas that our clients needed. How do you package and price those services for a monthly fee or for a fixed fee with change orders? What are the filters in looking for an ideal client? Do I just take a client because they will write me a check? Some of you take clients that they won't even write you a check. That's why you have big accounts receivable balances. So maybe you ought to have a filtering mechanism for those clients. And then what are your unique processes that you use that make you different from the competitors? And finally, the platform can be a strategic advantage. And that's a lot about what AccountantsWorld has been talking about for the last 5+ years, is the cloud is a strategic advantage to accounting firms. And yet the accounting firms, in particular some of the larger firms, have been very slow to move to the cloud. And I'm going to challenge you today. I think you need to make that commitment no matter what size and get there as quickly as possible, because once you're in the cloud, you do have a distinct advantage over your competitors, and your competitors aren't necessarily just other CPAs or accountants. They are other industries that want this work, financial services, banking, etc. So the question we ask is your firm prepared to play above the line? What's that really mean? And here's the graphic that kind of shows it. And that shows your typical compliance services below the line. I'm not saying there's anything wrong with those services. Most firms, that's their bread and butter. But they may be bending over to pick up $10 bills when they could stand up and pick up $100 bills, and their clients are willing to pay them, and those services above the line are not commoditized like the services are below the line. So you see questions here that I think most of you would answer affirmative to. Would you like to increase your revenue, attract new business, keep your margins at the level they are or higher, leverage technology and attract young talent? I don't know of anyone in the country that wouldn't. I get asked every day, do you know where there's a 5-year person that would be willing to come into my practice with potential ownership? And those people are few and far between out there. Too many of them have left the profession or haven't been identified as potential leaders. So this is what we're talking about, and I'll be more specific with some of the services here in just a moment. Let me explain this in a little bit different graphic as I build this out. You have the 3 levels of service. Level 1's compliance, 2's performance, and 3's strategic. Well, then I would put my tax, assurance, and accounting services in level 1, but I would put business advisory, wealth advisory, family office, and more CFO services in level 2. Then level 3 would helping clients develop a business plan, strategic plan, or if they want to acquire another business. And you see, we use the term trusted advisor very loosely in our profession. I contend that many CPAs are acting as a trusted technical advisor, where they're the smartest guy in the room with regard to tax or A&A accounting principles, when you can record revenue. But when you get above the line and become a trusted advisor, you may not necessarily be the smartest person in the room. You're in a room with smart people. And there is a difference in that. I think the big difference is over on the right side now. You see hindsight and perfection is what we were trained in accounting. But to be a level 2 advisor, you have to have more insight and be focused on progress. And then to be at the highest level, you really have to have foresight into the future. And if you have hindsight, insight, and foresight, you will have much more innovation in your firm. And right now, the profession has too much focus, in my opinion, on the hindsight and the compliance services, which are getting commoditized, whereas if you look at the above the line services, there's less fee compression, or there's less fee. It's around the entire year. It's not compressed into 2 or 3 months. So the topic today is, how do you build a roadmap to get there? And I'm going to give you this little graphic. And what's your value proposition? If you don't have a value proposition, it's hard to sell anything. And as the trusted business advisor, you can source and do the accounting for your small business clients. And I don't mean startup clients. I mean clients that may be 50 million or above in size. You can do it more affordably and in real time. If you have cloud-based systems, then they can do it themselves. And that's been something that we have had a part of, but we have never taken over the responsibility for everything. And that's partially the independence rules, but those have also changed with the new SARs. They have changed some. There's still some consistency. but would you rather have a $12,000 audit or a $120,000 small business client that you're not independent with? And I would say that it's stickier offering more services and getting a $120,000 client than it is a competitive audit. So the second is, what's that menu of services? And that really needs to come in the 3 areas of strategic, performance, and compliance. You also need to know that clients today, we're in a world of abundance, especially here in the United States, not a world of scarcity like some of us were raised in. So clients have wants, and they don't have to justify those wants. They do have to justify their needs. And we as a profession have been selling wants or needs to clients, and the wants are different, and I'll show you that in just a moment. So who are your target clients out there? Some of you that are smaller or just gotten started, if you haven't defined this, that's going to be a challenge for you, because as you grow, you may have outgrown some of those clients. And I know it's tough to leave them, but it may be the key to your future growth. So what are you going to accept? Anybody that can write you a check, or is your target client someone going to pay you $1,000 or more a month? And I don't know what's appropriate for you, but this is where the 10 times thinking, this is where the filters come in, and what niches do you want to really serve? You need to define that. Sorry about that. Then what's your team? You got to have somebody to lead this, somebody that's a champion, somebody that has figured out they're going to make it work, not someone that is trying to figure out why it won't work. That's the reason that some of the bookkeeping departments in many firms, they just don't have the right process or attitude towards the cloud, and they may have to be replaced. Then how are you going to package and price this? This is where value or a pricing matrix, fixed pricing, comes in. Your engagement letters should be value creation letters, and you're going to have to spend more time up front with the client. And then finally, your processes. Are they lean? Are they accordance to Six Sigma, where you're constantly improving them, eliminating loops, eliminating any steps that don't add value? And the information is going to be more real-time than after the fact. And I always use the example of an operator of a fast food franchise. He wants to see what his daily sales are, not what his financial statement is at the end of the month. And there are several businesses like that today. The mobile device, the iPad, the iPhone, have allowed people to do that. So the cash roadmap is pretty important. If your firm doesn't have one, I think you should sit down and develop one. So let's take another question. Now's a good time, and then we'll move on through the rest of the material after that question.
Okay, John, you want to open up the next poll question? Was the CAS roadmap helpful? Obviously, please select one, yes or no. Would everybody respond to that? Okay, John, just a few more seconds and then let's see the results.
Well, there was
Gary,
yeah,
go ahead.
I can see.
Yeah, very encouraging, Gary. I think 93% said that the CAS roadmap was helpful. So I think that's a very positive response. I'd like to hear your thoughts on that. And again, thanks everyone for voting.
Well, I think having been a partner in a 50-person firm, I can tell you there's always one or two that want more detail before they say, yes, that was helpful. So I'm going to try to provide you just a little bit more detail here before we go on. Of course, we have some limits in time. So I'm going to give you an example of different levels of services here. And this is level 2 advisory service. And believe me, this is just an example, and your firm doesn't have to do it this way. They don't even have to offer these exact services. But I think one of the things we've learned is that if you name a service, you own the service. So this is the level 2 advisory or CFO type service. And here we have the business connections where we have taken their monthly accounting work or their accounting work on an annual basis, and we've really made it real time under the Biz Connect. And I show you these names because if you name it, it's yours. And I think firms should do that. While we don't have Boomer Biz Connect, it's just an example. We do have some of the services that are up there in Boomer Advisors that we're licensed, and some of you have to be licensed to deliver the services. I'm just showing you how thinking differently and talking to your clients will tell you what's keeping, or they will tell you what's keeping them up at night, and therefore you can design these services and give them name to meet that. I'm going to quickly go through this because here's another example of level 3 advisory services. I think there are a whole lot of CPA firms and senior partners in CPA firms that could do this. They just need the process. They need to know how to package it. They need to know how to communicate the value proposition. We've even written some guides on how to do this, and we've certainly developed this over the last 20 years, and it works in any industry. We've done it for clients outside the CPA firm. So these are just examples that I wanted to put in the materials today. We don't have time to go over it all, but hopefully this gives you a little bit more. The other thing that I'll say about packaging is oftentimes as accountants we just want to see the numbers, but in marketing and sales, packaging is very important. And think of the packaging at Apple versus the packaging at Microsoft when you buy a new piece of equipment. Apple is extremely good at that. Steve Jobs was unbelievable. So how are you going to package your services can have a huge impact on whether or not people buy those services and what they're willing to pay for those services. So I think this is very important. So everyone says, well, what's it take to be a future-ready firm? And sometimes you have to kind of boil it down and simplify it because we're in a complex world right now, and it's getting very complex. But when I simplify it, I'm not saying it's easy, and I'm not saying there's one or two silver bullets that are going to fix it. It's a combination of things. So let me start with this and show you what I think are the keys. I think you have to have a plan. If you don't know where you're going to get sucked into areas that are not that profitable, that people want you to take care of because they don't want to take care of them as companies. And so you better have a strategic plan or a roadmap. Second, you have to have the right talent, and this is getting more and more difficult. The competition for quality people has never been as high as it is today, and it's worse today than it was in 2007 or 8, and then we had the recession and it freed up some people. I don't see that happening this time. And then what are your processes? And Lean Six Sigma, the 5 components there are: define the process, measure the process, analyze it, improve it, and control it. And I see in many firms, especially smaller firms, if you have multiple partners, the tax processing is different depending upon the partner. It makes it very easy or very difficult to train staff. It makes it difficult to have people work in one office or another office, I should say, and you've got to have some standards there. Well, the technology then is the ecosystem that surrounds all that today. And when you get in the cloud, you have to know what pieces of that ecosystem your firm and your clients need. So here's the formula: planning plus people plus process times technology equals high-performing firms. And I see this day in and day out, but it takes investment, not just of dollars, but of time and stepping back and thinking about your firm. So the one thing that really is key here is accountability. And if you're not willing to be accountable, then this is going to be hard to do. When I talk to the most successful firms with the highest rate of partner income out there, many of them are in just great markets. I will give you that. But the one differentiating factor is they're willing to be led and they're willing to be held accountable. And that doesn't mean that people aren't good people because they don't want to be in that environment. It means that you can't maximize performance and be future ready if you don't have those kind of people. So sometimes it just isn't a fit. So here are the characteristics. I'll summarize them real quickly of people that like accountability. They want specificity. They want to be superior in their jobs. They don't want to be average. They don't want to just get by. They will challenge people who are abstract. And I think we could go on a lot about this, but I want to make sure we have some questions. So let's look at this business ecosystem and the platform and what's contained for any small business today. They've got to manage their expenses. How do they pay their bills? How do they document those expenses? How do they prepare financial reports, both for taxing, financing, and for just their personal management? Then they've got payroll, most of them, and they have HR issues. They have scheduling and workflow. They have tax reporting. They have CRM and project management if they're of any size. And then they have risk management and wealth management if they're successful. And finally, legal. This chart could define every CPA firm out there and their clients. Now, what portion do you have control of today? I think you have control of the tax. And I'm going to show you how I think that's not going to be enough in the future. One question I get asked: what are the industries out there that we can be successful in? And I think there are several. Some of them are pretty obvious. The new one over there, if you don't recognize what it is, and the two states that are going big in it are Washington and Colorado. You probably don't want to get in that one if you don't even know what it is, because it's certainly a different business. The controls are far different. We're seeing a lot of people in agriculture now turn to the cloud and use the cloud. Farmers have probably leveraged technology in the last 50 years better than any other industry, even though it may not have been in accounting. They've done it with their equipment and their crop production. And so that is one that several of our firms are into. Construction's another one. You have to determine where you're going to put your resources. I think being a generalist will only cause more commoditization. So here's some of the things that have disrupted the profession. Right here in Kansas City, I will tell you that Google came in about a year and a half ago, and we can get internet 1 gigabyte up and down for $70 a month. That was a game changer. It's unbelievable to have that capability. And we're on with AccountantsWorld today. I think Sharda and Chandra have certainly disrupted people's thinkings over the past few years. They were one of the first into this cloud accounting, providing payroll services and accounting services. You see Renee Lacerte there with Bill.com. I'll mention Xero, which is a competitor, but if it hadn't been for Xero coming into the U.S., I don't think Intuit would have made the changes that they did. And then in education, Salcon, you know, all these people have changed the world, really. And it's going to only change more. And if we as accountants don't take advantage of that, I think we're missing a tremendous opportunity. So let me give you one quick example here. And I want to ask you how many clients you have under 1,000. Probably most of you have more than 25% of your total client number. If you don't, congratulations. And when's the work done for those clients? Most of it between February 15th and April 15th, 1040s. Sounds like a good business, but it may not be enough. So the question is, how do you take that 1040 tax client, if you're charging them $500, and make them a $5,000 client, or if you're charging them $1,000, a $10,000 client? And some of that comes from your processes. How can you be more efficient? And I will tell you that most firms are not very efficient here, and I saw this when I went to India and watched what they were doing and the software they were using, and that's where all the workflow software today came from, where those companies over in India had access to Federal Express, UPS, others, and they took part of that software, and that was the genesis originally of workflow software. So you do all of these things with a tax return, but you don't do a very good job of scheduling, and I'm generalizing here in my comments. You don't do a great job of billing, collecting. Maybe you've got the other processes, but you have to sit in the catbird seat and see this all the way through the firm if you really want to maximize revenue and provide good customer service. And that's why I show you this chart again and say the one connection you've got is tax, but what if you could go deeper and have more connections than just the tax? So the drivers here are, everyone's got a mobile phone today. We want real-time information. We want all these apps to integrate so we don't have multiple databases. And I think the legacy systems are at risk, and those accountants who don't want to change are going to be at risk because they're not going to be able to compete. They won't be able to find the labor, and that labor will be at a cost that's going to drive them out of the market or drive their margins so low that their incomes will go down. So here's a picture of an advisory roadmap. Now I can't put everything in one slide here, but you see it's got a sample value proposition, what some of the strategic performance and compliance services might be. It has different levels of bronze, silver, gold, and platinum. And then it has who are your top 10 existing clients, your business partners, your target market, who's on your team, both internally and externally. And we have in one of our programs the engagement letters, all the backup material that goes with this. So I'm just showing that quickly. Here's a menu of services. We actually have a better one that's more from a marketing standpoint, but this is how you might price out those services to a client. And then what are your filters? It's not just they can write you a check. You certainly want them to reward, but those that utilize more than one service are much stickier. Do they refer work? Do they appreciate the work that you give? Are they coachable? Do they enhance your capabilities? And are they high risk? And I think those, if you give your clients a rating, we recommend a -1 to a +5. You will determine very quickly which ones are good clients. So I'm going to give you a little psychology here in an abundance world versus the scarcity world. And I'm going to go quickly through this so we have some time for questions. But here's Maslow's hierarchy of needs. Any of you that took psychology probably remember this, or at least remembered the concept. But let's look at the hierarchy of wants. Time is more important than money to people who are in abundant society. They have adequate money, but they don't have much time. Relationships are also important to them, and who they know and who can help them. And if those relationships have a purpose behind them and how it will transform their business into the future. That's what we really want as business people. So if you can provide these top three to your clients, you're going to have less of a challenge in competing on price, less of a challenge of commoditization, and you're going to become known as someone that really can help them transform their business. So when you have a want, you don't really have to justify the want. I want to do business with you. I don't have to justify why. If I have a need to get a tax return done, I probably justify that through the compliance area. So there is a difference. So I'm going to quickly show you the 5 C's and then we're going to end. The first thing that's a challenge here is the communication, but most firms are afraid to make the commitment. And commitment's so important here. If you don't commit to moving to the cloud, you're not ever going to get there. The other thing is you have to have the courage to change, because this is going to be different. Once you change one client, you'll see the difference, and you'll say, we got to get everyone over there as quickly as possible. And once you get the courage, then the capability will come. Most accountants I know want the capability and they want the confidence first, and that's just not how it works. You have to make a commitment. And I think putting your own stuff on there, knowing that it works and having confidence in it, you have to sell yourself before you can sell your clients. So I think this chart's very important in getting you and your firm to change and offer different types of services in the cloud. So this courage and communication, very important. So success, you determine that. I'm not going to tell you, nor can anyone else tell you. That's personally defined. But you have to have a social presence today, and I mean that in social media. You have to be in the cloud, you have to be mobile, and you have to be able to analyze the data on a real-time basis. So that's what I would define as a future-ready firm. It requires some different tools for most firms. It requires the filtering system. Here are some of those tools, probably a project management system, a CRM system. You have to change your engagement letters. I would also recommend that you start using digital signatures. It will cut the sales cycle down significantly on engagement letters. It'll pay for itself very, very quickly. Storage is becoming very inexpensive today, so having a digital storage system where you can have people work on anything from any place is very important. So here's our Think, Plan, Grow, Be Successful, and Future Ready. With that, I would like to stop. And Jeff, what questions do we have?
Yeah, Gary, we've got a couple here that we have time for. On the metrics that you showed earlier, on the BTC metrics, where did you get the 13.5 multiple for technology? That was the question.
Where did I get the what multiple? The 3.5 multiple?
Yeah, I'm sorry, 3.5. Yeah, the 3.5 multiple for technology.
Okay. Well, I'm saying most people multiply their labor 4 times or more. So I use the conservative 3.5 multiple.
Okay.
If I'd done it 4, like most people do for labor, it would have changed it a little bit. But that was just a number that I've used over the years.
Okay. Another question, Gary, as we're trying to move up and move up on the playing above the line, how do we get clients to see value in our offerings versus others that are less expensive?
Well, value is sometimes in the packaging, as I said. So don't be afraid to package the compliance with the other services and focus on the integration and the transformation of their business. Don't focus on the price. You've got to get them out of a pricing discussion. A client that only wants to talk about price is probably not a good client. And It's the conversation you have up front, and it's what you know about that client is offers value. And value is determined by the client, not by the amount of time you put into the project. We could probably have a very specific back and forth conversation on that. It's hard to do it just with a one sentence question.
Yep. Well, I think what you're trying to say there is value is not and never should be just around price, but really around what you're doing and delivering and how you're engaging with that client to help them advance their business.
Absolutely, and probably the best way to do that is put yourself in the shoes of the client.
Gotcha.
What's it cost a client to find a bookkeeper today, if they can find one, and then how do they trust them? And what systems do they have to have, and what controls? You know, most small businesses can go to an accounting firm and get all those services packaged together, much less than they can hire one bookkeeper.
Right. Right. And I think before we finish here, we've got our third and final poll question, Gary, that we need to get in. So, John, if you can go ahead and launch that. While he does that, just a couple of administrative things. John, you want to go ahead and launch the poll? What action items will I take from today's program? And please check all that apply. Terminate one or more clients, develop a menu of services, rethink my pricing model, develop a team to deliver advisory services. So if you would please select all that apply and do that now, it would be greatly appreciated. You can obviously go to AccountantsWorld.com and see this webinar again. If you want to listen to it, to the recording, we'll also have the actual slides out there in short order, and we tend to process our CPE credits for all of you that need CPE on the phone here in the next 24, 48 hours and get that out to you. So with that, let's close the poll, John, and see what we have here. And just give that to Gary. Terminate one or more, Gary, 28%. So I got them thinking there. Develop a menu of services, 66%. Rethink my pricing, 63%. And develop a team to deliver advisory services, 35%. Any closing thoughts, Gary, on that last poll before we finish the session today?
No, I think that's what I would have expected, that most realize they don't really have a menu of services, and pricing is going to continue to be a challenge for us in the profession. And sometimes you accept the team you have and say, that's not what I want to deal with today. But once you develop that menu and your pricing model, that may force you to look at your team, and it probably will force you to eliminate some clients as well. So you can take that as your action plan away from today's session, and best of luck. And if anyone wants to email a question, they can certainly do that direct, lgboomer@boomer.com.
All right, very well. So we appreciate all of you for attending and staying the whole time. And Gary, we want to thank you for presenting this very thought-provoking webinar. And we look forward to next time. And we have another webinar coming up here next month. Thank all of you for participating. And don't forget, please go to AccountantsWorld.com if you want to review some of the strategies that Gary has given you today and see the remaining webinar series that we have planned for this year. Thank you all. Bye.